Hello students, in this video we will be solving problem number 13 of the self-practice question under the relevant costing. Let us just see what they have provided us. S Limited is engaged in manufacturing activity. It has received a request from one of its important customer to supply a product which will require conversion of material M, which is non-moving item. The following details are available. So we are having the book value of material M, realizable value of material M, replacement cost of material M. It is estimated that conversion of 1 unit of M into 1 unit of finished product will require 1 labor hour. At present, labor is paid at the rate rupees 20 per hour. Other costs are as follows. So we are having out of pocket expense rupees 30, allocated overheads rupees 10. The labor will be redeployed from other activities. It is estimated that the temporary redeployment will not result in loss of contribution. The employees to be redeployed are permanent employees of the company. Required. Estimate the minimum price to be charged from the customer so that the company is not worse off by the executing the order. Now, if we focus on the question, you will be realizing that the question is a basic question. In this basic question, they want you to find out the minimum price by using the relevant costing analysis. Now, first of all, we need to focus on each and every item which they have provided us. So they want to develop a product. In order to develop a product, they will require material M, they will require labor, they will require out of pocket expenditure, they will require allocated overheads. Now, if I am talking about material M, then material M is not a moving item which is provided in the question. That means it is not regularly used in the organization. That means we cannot consider the replacement cost as a relevant cost. Moreover, the book value which we are having, it is a sunk cost, thus it is an irrelevant cost. Now material M is having an alternative. The alternative is that we can sell material M in the market and we can realize rupees 80. That means if I am not going for the product, then in that case it is possible for me to sell the material M in the open market and I can receive rupees 80, which is the cash inflow from such kind of sale. But in case I am going for the product, if I am trying to satisfy my customer, then in that case I won't be able to sell in the open market. If I am not able to sell in the open market, there will be a loss of revenue. That loss of revenue is opportunity cost, thus it will be relevant for my calculation. So let us just develop a statement, and in statement we will be just considering those items which are relevant in nature. So first of all, we will be taking up the cost of material M, which is the realizable value, which is amounting to rupees 80. Then we are having the labor part. Now if we focus on the labor part, you will be realizing that the labor part is a sunk cost. The reason is that they are permanent employees of the company. That means whether you go for this product or not, you will be making the payment to your employee. Moreover, this labor, if utilized for this project, will also not create any kind of loss of contribution. That means there is no loss of contribution. Moreover, they are permanent in nature. That gives us an idea that the labor cost of rupees 20 here will turn out to be irrelevant cost. So let us just go for the write-up. Cost of labor being sunk cost. So I'm not taking any figure. So it is 0. Whereas we are having out of pocket expenditure. Out of pocket expenditure are known as cash expenditure. That means if you want to go for this product, you need to have a cash expenditure of rupees 30 per unit. So in that case, this expenditure are relevant to our decision. So that's the reason we will be considering this 30 rupees. Then we are having allocated overheads. Now allocated overheads are the sunk cost. That means you have already incurred this cost. Now you are just trying to allocate that cost to this product. That gives us an idea that this is an sunk cost. So if this is sunk cost, you won't be considering in your calculation. So in that case, what we are going to have is the summation of 80 and 30, which is nothing but the minimum price we are going to quote, which is turning out to be 110. That means whenever you are going to talk with your customer, you are going to tell him, or you are going to at least charge rupees 110 per unit. Thank you.